You might be trusting AI with a lot these days, but in the world of finance, where one wrong number can cost millions, leaning on a general-purpose AI could be the most expensive mistake you ever make. There's a really subtle but critical danger that you need to know about.
And that's the heart of it, right there. What if you ask your AI for a critical piece of data and it just invents an answer? It sounds like a bug, but it's not. It's a core feature of how these models work, and it has a name: hallucination.
And look, this isn't just some hypothetical scenario. Researchers focused on financial AI are ringing the alarm bells. This quote nails it. When an AI hallucinates in finance, it's not just a small error. It's a direct threat to your decisions, your money, and the trust you've built with your clients. So we've got to wrap our heads around this risk. Large language models, or LLMs, are absolutely changing the game in financial services. No doubt about it. But this tendency to just fabricate information, well, it introduces a level of risk that is just totally unacceptable when real money is on the line. So why does this happen? Why is it that an AI that can write a perfect email or a piece of code suddenly fails so badly when it comes to finance? It all boils down to one simple truth. They're generalists trying to play in a specialist's world. Let's break down exactly what that means. Look, don't get me wrong. Models like GPT-4 are incredible. They've been trained on a massive slice of the internet, so they can talk about pretty much anything. But that's the key phrase, pretty much anything. They're a jack of all trades, and in finance, you need a master of one.
And this is where you can really see the huge disconnect. On one hand, you have general language. It's broad, it's casual. But financial language? It's a completely different beast. It's packed with jargon, every word needs to be precise, and it's incredibly time-sensitive. A report from last quarter might as well be ancient history. A general model just isn't built to handle that kind of nuance and speed.
But, every big problem like this usually sparks a new solution. And this challenge has led to the creation of a whole new class of AI models built specifically for this job, the Financial Large Language Model, or FinLLM for short.
So what is a FinLM? Really? Well, it's not just a general AI that's read a few articles about the stock market. Think of it as an AI that's been on a strict, curated diet from day one. It's been trained on high-quality, up-to-the-minute financial data. We're talking SEC filings, earnings reports, verified market news, not some random comment from a forum. It's this focus on quality data that gives it its superpower.
And hey, this isn't some far-off future tech. These things are out in the wild right now. You might have heard of FinGPT, which is an open-source project, or maybe Bloomberg GP, which is a massive model that Bloomberg built using its decades of proprietary financial data. These are the pioneers, and they're already here. So let's peek under the hood for a second. If you look at how something like FinGPT is built, you can see it's a finance-first process. It starts by pulling in the right kinds of data: news, official filings, even social media. Then comes the really important part: data engineering. This is where all the noise gets filtered out. Only then is the model fine-tuned, meaning it's specifically taught the complex language of finance before it's ever used for something like robo-advisory. All right, so that's the what. But what about the so what? What can these specialist models actually do for you? This is where it gets really interesting, because the capabilities are pretty impressive. These models are masters of the core tasks that drive finance. They can perform incredibly accurate sentiment analysis, basically reading the market's mood from thousands of news articles in seconds. They use a skill called named entity recognition, which is like having a smart assistant who can instantly highlight every company name, stock ticker, and key person in a massive report. They can take a 2-hour earnings call and boil it down to the essential takeaways. And most importantly, they are built from the ground up to understand numbers and their context, the very lifeblood of the market. Okay, let's look at a case study that honestly is pretty mind-blowing. It shows just how powerful this specialized approach can be. We're going to talk about an AI agent that was trained to think, talk, and analyze just like one of the most legendary investors of all time.
So the idea here wasn't just to build an AI that knew facts about Warren Buffett. No, the goal was way bigger. It was to create an AI that could embody his entire investment philosophy. It had to learn his communication style, his focus on long-term value, his famous aversion to risk, essentially to create a true digital apprentice.
So how on earth did they do it? Well, the secret sauce, again, was the data. They didn't just scrape his biography. They meticulously created over 25,000 question and answer pairs to build what they call the Buffett brain. This data was pulled from decades of shareholder letters, interviews, and filings to capture not just what he said, but how he thinks.
And the result is frankly incredible.
You have an expert AI agent that can give you financial insights, not only with factual accuracy, but in the distinct, folksy, common-sense tone of Warren Buffett himself. It's the ultimate proof that fine-tuning an AI on high-quality, super-specific data creates something that a general model could only ever dream of imitating.
And that Buffett agent, that's really just a glimpse of what's possible. This whole specialized approach is paving the way for a brand new future in AI investing. So where is all this headed?
The next big leap is what we call multimodal models. So think about it like this. The AI isn't just going to read text anymore. It's going to have more senses. It'll be able to listen to a CEO's tone of voice on an earnings call to detect nervousness, analyze the charts in a slide deck to spot trends humans might miss, and even watch video interviews to get a full 360-degree understanding of a company's leadership.
Now, obviously, this isn't all smooth sailing. There are some huge hurdles we have to clear. Fusing all that different data, text, audio, video, is a massive technical challenge. And then there are the big questions around how to handle sensitive and proprietary data securely. On top of all that, you can bet regulators are watching very closely, which means we'll need rock-solid risk management to make sure these tools are used responsibly.
And this really gets to the heart of the matter, doesn't it? The goal of these FinLLMs, these specialist AIs, isn't to replace the human analyst. It's to build a smarter, more reliable tool. Think of it as the ultimate co-pilot, one that can sift through mountains of data and serve up trustworthy insights, freeing up human experts to do what they do best: make smart decisions.
So I want to leave you with this question to think about. As these AI agents get more and more sophisticated, evolving from simple tools into true analytical partners, what does that mean for the role of the human financial analyst? What skills suddenly become priceless? And how does the very definition of financial expertise change in the age of the specialist AI?